Hi, everybody. Thanks for joining. And just wanted to welcome Jason Williams back. We had spoken a few months ago about a couple programs and our current situation in the market relative to mortgages and financing. And Jason Williams is back from Guild Mortgage in Tampa. Welcome, Jason.
Hi, Melissa. It's nice to be back with you.
Thank you. I love talking about different programs and different incentives, and I stole your background.
It looks great.
I always like to come up with
Copyright infringement.
new, fresh backdrops. So thanks for that. Um, so today we're going to talk about it's not a new program, as I understand, it's the Hometown Heroes program. But it's been there's different benefits and requirements that we want to talk about today. It's been around for a while, and Jason, you can speak to that a little bit. But as of July 3rd, of this year. So we're a little bit behind the eight ball in talking about it. We've talked about doing this video for several weeks, and we both got busy and things got in the way, but it's not too late, and better late than never, right?
Agreed. Yeah.
So the Hometown Heroes program has existed before. It's been around, and again, different requirements and different benefits now. So we're going to kind of go through what that means and how this can incentivize buyers that are in the market right now. And of course, timing is everything, right, Jason?
Absolutely. So the original Hometown Heroes program had an occupational requirement, meaning you had to be in a certain type of occupation to qualify. What they've done is they've opened up the occupations to any occupation for a short period of time that you can take advantage of this program. There are two main requirements that come along with it. Your company has to have a brick and mortar office in Florida. The term that you'll hear is Florida based. Your company doesn't have to be based in Florida, but you need to have offices here. So for example, if you work remote from home and your company has no offices here and they're based out of California, you can qualify for this program. But if you have, say, a California-based company who has branches here and you work in one, it's available for you. 5% of the loan amount that you're financing is what's available to use for your down payment and closing costs.
That's awesome news. I have a lot of out-of-town buyers, but a lot of them do have offices based in Florida. So initially I thought they were kind of counted out, but the brick and mortar thing is really critical for this, right?
Great. Yeah, that's the big category, and that appears to be a temporary situation. So if you fall into that category, I wouldn't wait too long. If this is something that will enable you, or if it's something you need to get into a house, this program is well and above all the others that are available through Florida Housing. The other programs have flat amounts, like say $10,000 or something like that. But generally speaking, if you finance for $400,000, you can get $20,000. That's going to cover a big portion of every. You may not need much at all to get into a property.
So your down payment or your closing costs.
Yeah, it's going to cover closing costs. If you've got, say, a 5%, or 3% down payment, you may need, $5,000 to $8,000 of your own money, but that's a pretty rare opportunity to get into a $400,000 or $500,000 house with that type of money being all that you need.
Okay. And what is do we have a max income level?
We do. It's county based. So if you have a loan officer that you're working with, they can check the counties. I sent the income sheets, which break down county and household size, to all the agents that I work with. So you'll definitely want to have them check that out up front. The good part about this is the income is only based on people that are on the application. So let's say you have a husband-wife combo or whatever, and that other spouse maybe puts you over the income limit. If only one of you is applying, you can still get it. Where some other programs actually look at the household income, even if they're on the loan or not.
Okay.
So definitely ask the loan officer to check that.
Okay. We'll definitely do this, and this can be paired with.
Sorry to interrupt. They're very reasonable. I'd say average incomes are maybe 110 to 130,000. So it's not one of those low income qualifying programs. It's very reasonable.
Yeah, that's good to know. That's excellent. And it can be paired with FHA, correct?
Yeah, all programs, FHA, VA, conventional, even USDA can be paired with this.
Okay.
So, if you get into say a VA situation where you can do 100%, this will cover your closing costs and you could potentially get into a house with no money.
So, and is this a must be for first time home buyers?
I'm sorry, is it a what?
It's a must for first time home buyers, or you must be a first time home buyer.
Oh, good question. So, if you haven't owned a primary home in the last 3 years, you can get into this program. So you can even have investment properties that you own. As long as you haven't lived in it as a primary home, you're considered a first-time buyer on this program.
Has that always been the case? Or is
No,
that
it depends on the program, but generally speaking, the requirements have evolved somewhat over the last few years. It started off as if you haven't owned a house at all in the last 3 years, you're a first-time buyer for any of these programs, including just the standard Fannie Mae 3% down.
right?
So we made some adjustments to, not owning a primary for this program. So that's where it currently stands, and I think it'll probably stay there, but I don't know for sure.
Okay. It's just interesting because you always think of first time home buyers as you take that literally. And then when you say 3 years, well, a lot of people have been in their homes for
That
over.
was interesting for me when I started doing these programs a long time ago. I started digging into the guidelines and I was annoying Florida housing. I'm just like, are you sure? Like, is this really the case? That's not a long time, but it's great.
Yeah, I had a buyer ask me last week, we were talking about it. And she wanted me to confirm the third or the 3 year. And I was like, yeah. And it always is kind of surprising to me that that's the case for first time, but
Me too.
I'm not going to question it any further. And then let's talk about the minimum requirements as far as your job. How many hours a week do you need? If you qualify for this, you make 110,000 a year as, in sales or whatever your occupation is. What is
Right.
that? What are the other requirements?
There are the two main qualifiers. One is 640 credit score. There's no exception to that. So your median score, the middle score, as we call it on our end, 640. Another interesting aspect of this program is you've got to work 35 hours a week. There's no wiggle room around it, and it's got to be verifiable. Where that came from, I don't know. I'm sure there's a reason they put that in the program. So let's say you have a traveling nurse, for example. Their hours are set at 32. They can't get into this right now. Now, if they go back to the old program, they can, unless they keep this in there. Self-employed individuals can qualify for the program as well, but you got to verify that the person either through a CPA or third party works a minimum of 35 hours a week. So it can get a little tricky on that, but if you have a standard W-2 type or salary position, that's not a problem.
Okay. So, well, you mentioned sales or real estate agents and, insurance agents or whatever who have a brick and mortar, but their offices or their hours are obviously pretty flexible. So,
right. Yeah. I haven't got that scenario yet. I would love to, just to kind of present the
well, hopefully,
information. They weren't overly detailed on. Go ahead.
no, go ahead. The screen froze for a second. So.
Oh, okay. I'm sorry. Yeah. In the training, they didn't say this is exactly what we have to have. So I think they're open to documentation on that. But what that would be, I think just have to put your head together with loan officer and the client and
Okay.
see what you present. But yeah, I would definitely tackle that up front. Prior to going under contract, get as pre-approved as you possibly can if there's a question mark on that scenario, because it appears to be a hard line.
Okay. And there's also a home buyer education course. Is that the case for all first-time home buyer, or is that specific to this program?
It's for all first-time buyers or the 3 years. If you want to get these, low down payment options like 3% with Fannie Mae or these down payment assistance programs, it's an 8-hour online course. You can take it at your pace. I think it's maybe like $50. But yeah, that's something that's required. You don't have to do that prior to going under contract, but it does have to be finished. And you'll get a certificate that you'll give to your lender to allow them to final approve the loan for closing.
Okay. And are there restrictions as far as you want to purchase a condominium or duplex type of property, or as
There
long
are limitations on the 2-unit properties that are in the guidelines. So if that's something that you're interested in, check with your loan officer. Condos aren't a problem. Townhomes, obviously, single families are fine. But there is a restriction on 2 units, I think, through the FHA program. I couldn't say for sure, but
Yeah.
it would be easy to find. If someone asked me, I could go in and find it pretty quickly.
So, and this started beginning of this month, July 3rd, and there's how much, let's talk about the funding. How much was put into this program?
So the original amount was 100 million. Currently, it's at 50 million. So people are understandably freaking out. It's already half gone, and I totally understand that. But I'm not saying I can predict the future, but based on my experience with new programs, there's always a rush to reserve the money, and it doesn't take a lot of information.
So is it half gone or half reserved at this point?
Reserved, good differentiation, right? So 50 million is reserved. That doesn't mean it's already closed and already been allocated. That means, loan officers have gone in and reserved those funds for potential closing. So you're going to have attrition. So that I'm just speaking from a somewhat educated standpoint on this. I don't know for sure, but people who speculate that the money will be gone in 2 months, I think will be wrong. But it is a limited time. I would say, I think originally they were probably expecting the money to last 6 months. 5 to 6 months seems like probably what it would work out to be right now, maybe 4.5. So if this is something that's going to get you into a house, like you need this to get into a house, you need to get in the market.
That's good to know. So we have a window and that window is closing in. So you're predicting, even though we can't really predict, anywhere from maybe 3 months.
3 to 5 months, I would say.
Okay.
And there isn't any indication, not that they would do it this early, that they're going to replenish this particular fund, the 100 million. Indications are they're going to keep that traditional hometown heroes going forward with the occupational specific opportunities. But this one, once it's gone, it could be gone.
Because original the Hometown Heroes was healthcare, firefighter, what other services?
Yeah, like 70 occupations, teachers, nurses, doctors, firefighters, police officers, physical therapists, psychologists. Like there were literally, if you were, mental health, literally, I couldn't believe there were so many occupations. I was happy to see that. So this one just opens up to everybody for a short period of time, and then probably going to close it back up to those occupations.
Okay. So if anyone has a question on, if their occupation is eligible, they can just contact me and I can reach out to you if there's any question. But it sounds like if it's brick and mortar in Florida, it's fair game.
Yeah, right now it is.
Okay.
Yeah. So yeah, I have like a client right now that's in processing and reserve the funds. He works for Suzuki, works at the dealership.
So how do you get reserved? What is required for just is that a bare minimal of requirements at this point, or
contract? Right. You got a contract, and like we go in and I enter the data, right? And I reserve the funds, but I've got to have a physical address. So I'll, need the contract that it's executed, and they're, under contract to purchase that particular address, because that money is assigned to the address in the housing system. So as long as you're under contract, your loan officer should be able to reserve those funds for you.
Fair enough. So did I miss anything as far as any requirements? Anything else we need to share with potential buyers?
Now, the big things were the 35 hours, 640 credit score, and limited time. Those were the main that I would put across to people. And maybe not even the 640. Sometimes, there's a quick fix if you're near that score, but the 35 hours and the limited time for those those people who are not in the traditional hometown hero fields, they need to jump on this now.
Okay. Well, and I love these programs. These incentive programs are phenomenal. I have a lot of buyers, many out of state, but many of them have offices in Florida as well. So big help. And especially with interest rates still sort of up there. What are they today, Jason?
Well, interestingly enough, the interest rates on these programs are slightly below market. So Fed raised a quarter yesterday. Everyone has reacted to that. So rates are up today, but generally speaking, high sixes to seven is where you're going to be probably for a while. But at some point we'll get a break. It's hard to predict when that's going to happen.
We know. Okay, awesome. Well, thank you again for chatting with me this afternoon. Always a pleasure, and I'm sure we'll talk again in the next couple months. You always have things up your sleeve, and love to share that with my buyers and give people opportunity and incentive any way we can, right?
I agree. I appreciate the time. Thank you.
All right. Thanks, Jason. Talk to you soon.
Bye.
Bye-bye.